only way that the customer can exit the market. Customer leave markets for us.
Oh, George, he was trying to say something about internal controls. Yes, please, who else? Who else? Yeah,
Okay,
Mohammed, please, you can talk.
I think internal controls basically is you making sure that the is achieving its aims and then objectives, and then also you make sure that there is compliance to law. I think, yeah, basically that's what internal controls.
Okay, that's very true, though. That's very true. One thing you mentioned, yes, ensuring that compliance is achieved. Yes, so that's an aspect of internal control. That's right. George, can you please continue what you're saying? I think the call dropped. So can you please continue, George? All right. So I think we should just start so that because the internet is trying to mess up. Anyway, so we're going to learn about internal controls, what internal controls are, and then the types of internal controls that we have, and then how we can ensure internal controls in our various startups. Let's remember that in as much as our businesses are probably startups or we are now starting, okay, or probably they are at a middle stage or something, we still need to perform internal controls, or we still need to ensure that internal controls are adhered to, policies are adhered to. Okay, it shouldn't matter if we are a small business or not, because I believe that the earlier you start practicing these things, the better it helps you. Because when you get to that stage where your business is actually expanding, okay, you don't need to come back to now think of how to ensure that people comply, or probably your assets are protected and all that, or even ensuring that there's maximum efficiency. Even if your business has just 2 employees, you should be able to have internal control policies so that it builds the organization. As the organization grows, those policies also grow with the organization. All right, so as I always do, I'm going to share my screen with you. I'm going to have a look at the whole concept about internal controls. Kindly feel free to prompt me if you have any questions. All right. Okay, so let's quickly share. I have lights out here, so I'm really scared. I pray that I'm able to finish the class before probably the laptop goes off or something. All right. So when we say internal controls, okay, basically, they are procedural measures, or let's say policies or procedures that an organization adopts to protect its assets. One, to ensure that the accounting data is correct. Three, to maximize efficiency in your operations. And four, to promote compliance. I'll take it again. When we say internal control, okay, it is basically having procedures being put in place, okay, to ensure that your assets are protected, your accounting data is correct, efficiency is maximized in your operations, and then also you promote what compliance. So all these things put together defines internal controls. Okay, so internal control is not only limited to, let's say, accounting. No, internal control deals with how we protect our assets. You have a business. How are your assets protected? Have you labeled your assets? Are they just lying there? Your inventory, your stock, the things you are selling, do you usually count them? Are they protected? Do you have a regular count on them? Okay, your accounting data, is it up to date? Are your records correct? Have all your transactions been captured? Have all your transactions been captured? All these things help us to ensure what internal controls. Also, how are we maximizing the efficiency of our operations? Are we actually doing the right thing Are we efficient in delivering our products? Are we efficient when we render our services? Do we promote compliance at the office or at the business? Is everyone compliant? All these things are internal control. So I believe that every company, whether big or small, must be able to adopt a set of internal control policies so that when the business becomes bigger, it doesn't affect your operations. It also helps to put the business in order. You know what is actually going on. But without internal controls, anyone can just get up and do anything. Okay, but then internal control helps to put people in check. There are checks and balances. There are certain things you can't do at the office. There are certain things you can't do on site. There are things you can't do in the shop. So all these things are there. And sometimes too, we might not be at the office physically or the shop physically. Okay, we employ people. How do we ensure that these people that we have employed are doing the right thing, even when we are not around? So all these are internal controls. Okay, we know that when it comes to business, two resources matter most. That is our time and then our money. We are all very mindful of our time and our money because they are very important resources to us. Okay, so in order to ensure that we're really utilizing these resources, that is our time and our money, we need to implement internal controls so that we can actively monitor the operations in our various businesses or startups. Okay, so basically, internal controls are procedures or they are policies that helps us to actively monitor our operations. And this comes in different ways or different varieties. How we protect our assets. Our assets can even, the goods that we sell are assets, so how we even protect them. We have a warehouse. Do we take stock regularly? All these things are internal controls. So now let's look at the various types of internal controls. As a startup, which of the types of internal control can you adopt? At least there are three. We can either adopt all three, or we adopt two, or we adopt one, depending on the size of organization, depending on our strength, or how we want to achieve internal controls. Okay, so we have three main types of internal controls. We have the detective internal control, we have the preventive internal control, and we have the corrective internal control. When we say detective internal controls, okay, they are controls or they are procedures that have been put in place to find errors after they have occurred. So let's say there are certain rules that you've put in place or certain procedures that you have outlined in your organization to achieve effective internal controls or to achieve maximum efficiency. Okay, now one thing you also need to know is that internal controls also help us to find errors. If you have proper internal controls put in place, if there are errors in organization, through these internal controls, we can be able to identify them. That is why I said we have three types of internal controls. So the first one being what? Detective internal controls. It helps us to find the errors after they have occurred. Okay, so for instance, we try to, let's say, have surprise cash count. We have, maybe we keep cash at the office or we keep cash at the shop, wherever we have our business. We keep cash. Maybe we have a safe or we have a place where we keep cash, and you work with people, and these people, let's say some of them know where you keep the cash because of how you work with them. Okay, you should be able to have a surprise cash count, or let's say you have a cashier, you have someone who is there who handles your cash for you. Okay, you should be able to have a surprise cash count. The cashier doesn't know that you're coming today to count cash. You just go today, and based on the transactions that you have in your records, okay, you know that, okay, as I'm going to cash this count in this cash, at the end of the day, I should have about, let's say, 300 cedis in our safe. Now you go to the office, you just pull out the safe, you count your money, you realize that the cash is now 200 cedis. Per the records, so the money should be 300 cedis. Then there has been an error, so you probe. It could be that money was taken out to buy something, but then it wasn't recorded. So through that, you're able to now record that transaction. Probably the person there could not record it because either the person probably closed, at the time the person was closed, and that's when the incident occurred. Okay, or maybe the person even because of the kind of busy schedule the person had to face that day, the person could not get time to record it, or it's an oversight. So when you have these checks, you are able to identify some errors. Let's say you sell products and you have a warehouse, okay, you always need to take stock of your inventory. So maybe once in a while, once in a month, you go to the warehouse, you count them. Okay. Now as you count them, you know that per the records that you have 30 pieces of A, 50 pieces of C, 100 pieces of D. You go to the shop and per the record that you count them. If a tally is perfect, but that is what a detective internal control. So you are trying to identify this and if there's to identify whether there has been an error or not. So if you realize that okay, after counting, certain things are missing, then you can now probe and find out or investigate about it and know how things happened. And when it happens, so these are small, so there's no need. If we feel that our business is very small, so there is no need for us to ensure internal control. It will really worry us. That is why it is important that we always have these checks and balances, things in place to help us, okay, to effectively monitor everything that's going on in our organization. Great. So we are also saying that detective internal control can help represent the tangible ones, even intangible assets. Okay, and then also our inventory forms part of our assets. So for instance, those of us that are into the selling of products or goods, okay, we need to take stock of our inventory and know what is happening in order to protect our assets. Even the assets at our workplace, the kind of equipment that we use, we also need to ensure that these assets are always in good shape through our internal controls. So when we say detective internal controls, they are designed, okay, to find errors. So you can decide to implement this, okay, maybe once in a while, you come up with one or two things or some actions that you do in order to identify errors that have occurred. When you do these things, it means that you are performing a detective internal control. I believe we all have sort preventive internal control. With this kind of internal control, okay, we put in place procedures and policies to prevent irregularities and errors from happening. You know, for the first one, nothing is in place, but then we do our own checks and balances to identify the errors. But with preventive, you don't want to identify any error after that's occurred. You just want to prevent it. So instead of you waiting to have surprise cash counts, every day when you close from work or when at the close of business, you count your money. Okay. And then also you have a lock at your warehouse, you lock it, there are security people, you know, you are putting things in place to prevent these things from happening. So instead of you waiting to find out the errors before acting on them, what you can do under preventive internal control is that you put in place measures or processes, okay, to prevent errors and irregularities from happening. So while detective controls occur irregularly, because detective, the thing has to occur before you find out. But for preventive, you are constantly preventing it. So you put in measures or actions or certain things that will prevent errors from happening. All right. So you can now think about analyze the business. Okay. So what can I do to ensure a preventive internal control? You render services. Okay. Now what can I do to ensure that as my workplace, these things are prevented? For all you know, you sell a product, maybe you're into softwares. How can you prevent someone from stealing your ideas, from stealing your assets? In this sense, it becomes an intangible asset. The softwares or the insight, the intellect that you possess in order to bring about all these things, in order to help with the rendering of service, it can be a consultancy. All these things, you need to ensure that internal controls are there. You don't say, okay, for me, I don't sell products, so I don't need to keep any inventory or keep stock of anything. But you render services. Someone can decide to use the same strategy that you use, okay, Because sometimes people break away from us. Maybe you can have employees, they will leave you and then they'll go and set up their own business and the same thing you are doing. So you need to also make sure that you have internal controls in place. You prevent irregularities from happening. You prevent errors from happening on a regular basis. So basically, what we can all do right now, and I believe we all do, is that we lock our buildings, of course. But then sometimes too, with regards to the computers that we use, do you have passwords on them? Or anyone can just pick up your laptop and then enter anything with a kind of accounting and transactions that you do. Maybe you accessible access must be known by people who are directly working with the transactions. Any other person shouldn't know. So all these are preventive internal controls. You put in measures to prevent irregularities from happening. All right, I believe we all understand to this point. Then we have the third one. We have something we call corrective internal control. Okay, as the name suggests, corrective internal controls are put in place to correct any errors that were found by the detective internal control. I remember that when I started, I mentioned that after you have identified the errors that have occurred, what do? You don't need, maybe you realize that, okay, when you went to the warehouse and you counted your inventory, you realize that some things are missing. Now, after you realize some things are missing, what are you doing to ensure that this thing doesn't happen again? So this is what we refer to as what? Corrective internal control. We try to put in place corrective measures, okay, in order to help us with the errors that we detected. So if errors are detected, whatever thing that we do in order to ensure that these errors do not happen again, okay, is referred to as corrective internal controls. When an error is made, business owners or startup owners should follow whatever procedures have been put in place to correct the error. And I believe that from now onwards, you're going to think of how to ensure corrective internal controls. If an error occurs, there has to be procedures. Let's say an employee did not comply with certain rules. What do you do to that employee? Okay, now you need to ensure that there are procedures that ensure these corrective internal controls so that in case these things should happen, then you can be able to correct them as soon as possible. Because if you delay, it's likely that it will happen again. So for instance, employees should be able to report the problem to their supervisors. Maybe you're working with people. There should be a set of procedures or policy that says that anything that happens in the organization, the first person that must know is you, the business owner. So if anything happens, whether you are there or not, if anything happens, your employees should be able to let you know the problem that has occurred, and then you should also come up with a way or devise a way in ensuring that these problems do not arise anymore. So these are the three main types of internal control. These are the three main types of internal control. So we have the detective internal control, we have the preventive internal control, and we have the corrective internal control. So we can look at maybe after the lesson, we can now sit down and then go over these types of controls and see how we can implement them in our various startups. Now, someone may ask, okay, why should I keep internal controls? What is the need for internal controls? My startup is small. I just have 2 employees. I know everything that's happening. It is important that you keep up with internal controls, because as I always say, I believe that we all have visions of expanding our businesses. We all want to get to that point where we have investors coming in to support our businesses, okay? And then when you apply internal controls, the first thing is that it provides you a competitive edge when seeking funds from investors. Investors don't just get up and give their money or push or pump money into a business. No. Before they decide to pump money into a business, they have analyzed the business, they have seen what the business is doing, And sometimes not only about the service that you are rendering or the product that they are selling, they also want to look at the kind of control that you have in place. Okay, that's what you do. What are some of the procedures that you have in order to ensure proper checks and balances? Most of these investors would like to find out. Okay, so when you already implement internal control, it becomes easy for you to convince these investors because it puts you at a certain edge. Okay, it provides you with a competitive edge. It makes you competitive because they know that, okay, you have the things in order, everything is going on well. You can be able to monitor your operations, whether we are there or we are not there, because these investors, they are not on the field with you. They are not directly related to the daily operations of organizations. So you need to give them that assurance that should you pump money into my business, that's how I'm going to do it. Because there has to be these internal controls there for them to know that, okay, you have these measures there to address these issues, to protect your assets, to ensure compliance. You have procedures or policies that helps you keep accurate accounting records. You have policies that helps your employees to be compliant. All these things are there. Okay, so it's not only for you, it's about you. So it's about you gaining a competitive edge when you are seeking funds from your investors, because they will want to see all these things. Secondly, when we implement checks and balances in our operations or in our organizations or in our startups, it shows the maturity of the business. Okay, every matured, your business can be a small startup, but then it is matured. It's just like a little child. You can have someone of 18 years who is really mature, can take decisions, can take care of him or herself. Okay, whether his parents are there or not, the 18-year-old knows how to behave. The same way goes with businesses. Your business might be small, probably in terms of size, the size of the employees, in terms of the capital that you have, but then it doesn't mean that the business is not matured. The business can be matured based on some things. And one of the things that helps the business be matured is that when the business implements what internal controls, because we know for you to implement internal control, it means that you know what you are about. You want to ensure what you want to maximize efficiency in your operations. Okay, so not everyone includes internal controls because the mindset they have is that, oh, my business is small, I'm now starting up. That shouldn't be the case. Okay, but your business can just be 2 years, but then you are matured. A business can be 10 years, but then the business is not matured because they don't have some internal controls in place. Things get missing. People just do anything they want. There are no procedures. There are no responsibilities shared. Anyone just gets up and do anything. Okay, so these are all internal controls. Right. So it's best. I have a friend, he works somewhere. The business has been in existence for a long time, but when he tells me the things they do, I wonder, hey, do they have internal controls? But the business is grown. They've been in operation existence for a long time. Okay, so it doesn't matter the number of years you've been in business. What will show your maturity as a startup or as a small business is the kind of internal controls that you implement in your organization. That is why you need to sit down and understand what you are doing in your organization, and then you need to decide what are some of the controls I can implement, okay, so that I can also achieve proper internal controls. The third point is that internal controls helps us to hedge risk or mitigate risk or prevent risk in order to protect our company's reputation. For instance, you don't have surprise cash counts, you don't check your inventory, all that you know is that, oh, I'm selling my goods, and you have people you are working with. You don't know what these people are doing behind your back. Okay. And then if you don't do these things, it will get to a point whereby the business has incurred a lot of expenses, or people are stealing your raw materials, people are stealing your inventory, and you are wondering how that is happening. But then because you are not having these internal control checks, your employees can easily steal some inventory. Someone can even walk to the shop and someone can just pick up something because there's no CCTV camera. Nothing is there. There's no security at your office or your business. Okay, even if it's a shop, you need to provide some form of security. It doesn't mean that you need to go and pay or go and hire a security man. No, you can do it yourself. There are certain things you do when a customer comes in. Oh, please stand here. Oh, please do this. You are doing all these things to prevent someone from stealing your money. It's funny that I watched this funny video about a guy who was talking about how he goes to shops and he robs them. I believe most of us have watched that video. It was a funny video. And the guy said when he goes to a shop, he greets the shop attendant or the salesperson over there, and you realize that the salesperson is probably not paying attention or not concentrating. He just goes to the drawer and takes money. Sometimes we might be busy, so we have shop attendants, we have people we are working with. How have you placed security in your shops so that even if that person is busy doing something, that security that you place there will prevent people from stealing your money? Because if you don't take care and if you don't ensure internal controls, it will come to a point whereby you've incurred a lot of expenses or people have stolen a lot of your inventory. Then you are now rendered what, bankrupt, because you don't have money anymore. At that point in time, you've ruined your company's reputation, or sometimes because of the issues that will come up, okay, you will not have to collapse the business. The business will now have to wind up. Let's take a look at the banks that collapsed. All the banks' reputations were ruined. The banks that were collapsed. Some of these banks were banks that we really respected. But then they realized that, okay, there were not proper internal controls over there. Is that all right? So their company's reputation were ruined. So the earlier we start implementing internal controls, the best it helps us so that it prevents us from what? Risking our company's reputation. Now the last one, I think I mentioned it. I said that internal controls provide our investors with what reasonable assurance. You are going to seek funds, okay, from investors. When they realize that, when it comes to internal controls, these are the policies that you put in place. They become impressed, okay, so they are assured that no matter what, there are certain procedures that you've put in place to ensure what checks and balances, to ensure compliance with regards to your employees, to protect your assets, to ensure that your accounting transaction is correct. Because these investors, they are mainly interested in the financial reporting that we give to them. So if they realize that your accounting transaction is in the right shape, you have controls, okay, you have measures put in place to ensure that all your accounting transactions are in the right way, or they're done in the right way, they have that assurance that when you send them a report, they can believe that that report is showing a true reflection of what's actually happening in your organization. But for instance, if there are no internal controls regarding your accounting system, they can be in doubt. Okay, they'll be wondering if you really have proper checks with regards to your accounting system. All right, so these four things and more are the reasons why we need to implement internal controls in our startups. It provides us with a competitive edge. It shows the maturity of our business. It helps us to hedge risk, okay, so that we can always prevent the ruining of our company's reputation. And also, it provides our investors with reasonable assurance that we are achieving our financial reporting objectives. Great. Now let's look at some of the ways in which we can implement internal controls. So I've talked about internal controls, the need, the types, what it is. Now, I know someone is asking, okay, so right now, how can I implement some internal controls? So I have about 5 ways in which we can implement our internal controls. Now let's have a look at them. First and foremost, we need to separate, and now starting up, we have let's say 2 employees, or we even have 1. Okay, so how then do we separate duties? But then, if we know this thing, if we keep this thing at the back of our mind that I always need to separate duties, even when the business is enlarging or the business is expanding, we know that at a point in time, the person receiving money, the person recording the details should not be the same person. So in bigger organizations, whoever receives money just receives it and reports to someone else. And the person making the transaction is also different. The person also generating the report is also different. So that at the end of the day, different people are handling different things. So there's not one person doing everything, because if there is any fraudulent activity, we cannot tell. So if we come to your business and it's only one person doing everything, it is not the best. But I understand because sometimes the business is not big enough to bring more people on board. But let's always have it at the back of our minds that even if we are two people there, let's share the duties in such a way that we are all covering each other's back. So if I'm not there, I should be able to review your work. If you are not there, I should be able to review my work. That kind of thing should always be there. So let's say you are the business owner, you have two employees. What you can do is that with what the two people are doing, each of them is reviewing each other's work. So A knows what B is doing, B knows what A is doing. It's even likely that these people can come together, but at the end of the day, the final reviewer is you. So at the end of the day, you get to review your work after they have reviewed each other's work. So that's what we can do. So even if it's a shop and we have two attendants, they all know what's in the know. Let's say one comes from Monday to Wednesday, the other comes from Thursday to Friday. If the person coming from Wednesday to Sunday comes, at least he goes through all that the other person came to do. If there are questions, he asks. The other person also does these things. So if these controls are there, okay, no one will think of engaging in any fraudulent activity because at the end of the day, the reports will come to you, and you, the business owner, will also have the final approval of their work. So there has to be a separation of duty. You need to split especially when it comes to accounting. Okay, when it comes to accounting, when your business expands and you're getting more people, when it comes to accounting, you really need to split the responsibility. Whoever is doing the bookkeeping, so let's say if someone receives cash at the office, it shouldn't be the same person going to deposit the money at the bank. No, they should be two different people. So what you can do is that maybe your cashier or your attendant or whoever you're working with can receive cash on your behalf. But whoever is going to deposit the money at the bank should be a different person. That's it. So that you can also know what the other person is doing. Is that right? Great. Then also we have something we call what? Physical audit of assets. Physical audits of assets include hand counting cash and physical assets tracked in the accounting system. So as I already mentioned, our inventories, our materials, our tools, how often do we count them? We can decide to schedule a day in a month, maybe at the end of every month, maybe the last Friday of the month. I'll go through my assets. I'll go through my inventory. Okay, at the beginning of the month, I had these assets in there. Okay, I had this number of chairs. How many are broken? How many are in bad shape? So there's a constant audit of your assets so that you are always in the know of what is happening. Because if you don't take care, things will be getting missing at the office and you wouldn't be aware. Things will be getting missing in your shop and you wouldn't be aware. Okay, the material that you work with. Maybe you produce a good, you produce shoes, you have material that you work with. These materials are very essential because without them, you can't produce the goods that you are producing. You are working with people. Always ensure that there's a physical audit of these assets. At the end, every 2 weeks, you can try to have an audit count. Okay, at the end of 2 weeks, I'm going over the materials that I had. Beginning of the month, we had these materials. We bought these things. And these things will only help you if you also keep very good records of your transactions. Any inventory that comes in, it is recorded. Anything that goes out, it is recorded. So when you go and account your materials, you know that from the beginning of the year, I had 30 pieces of this material. Now, in the second week of the month, okay, I have reducing the goods, then you are okay. But if you have 30 pieces and when you are checking in 2 weeks' time and you have 15 pieces left, meanwhile, you've used only 10. And the question is, where did the remaining 5 go to? So all these things are ways of implementing internal controls, physical audit of our assets. The third one is that this one is purely relating to accounting. Okay. So the third one is that standardizing financial documentation. Now let me ask you, do you keep invoices? Do you give out invoices? Do you give out receipts? Okay, you need to have a standardized documentation. So all your invoices must be the same and they must be numbered. Okay, so if you are using an invoice for customers, if you issue invoices to your customers, they need to be numbered. So probably you're not at the office, you're not at the shop. When invoices are issued, you need to have a copy of those invoices. So when a client comes or a customer comes, okay, I want to find out about these things. Can you please give me an invoice? Whoever is responsible gives an invoice. Now, as the invoice is given, there has to be another copy kept at the office. So receipt. Do you issue receipt? It's important that you issue receipts because receipts will let us know the money that we have received. But if you are selling or you are rendering services, okay, you've rendered about 10 services to different people, you need to keep receipts of all these so that you know that, okay, at the end of the month, I rendered these services, and these are all the receipts that I issued out. These are copies of the receipts I issued out. Okay, you can even be able to balance the money that you received. Because per the receipts, you got this amount of money. Okay, this money should also reflect in your bank accounts. Probably might have used them, you have used some money, but then your expenditure will also show the money that also went out. So there has to be a standard documentation of everything that you use at the office. Your invoices must be standard. If you don't have an invoice yet, you can create an invoice. So it's quite simple. You can just get a laptop, open to Word, search for types of invoices, then design your own invoice to the one that best suits you. Let's say yes, you've not yet contracted someone to provide an invoice for you. So that's what you do. Then maybe you have a small printer at work, then you print them out and you number them. So the numbers are in order. So 001, 0002, 0003. So they are in order. Your receipts are also in order. Okay, so when there are consistency in this, it helps you to record your transactions very, very well. Because when you take the receipt book or you take the invoice, you know that, okay, so these numbers are in order. Maybe someone wrote an invoice and there was an error, so it was cancelled. So you have 007. You still have a number a number is occurring twice. Or maybe after issuing invoice number 0, maybe invoice number 10, the next invoice that was issued was invoice number 12. You wonder, why? From 10 you go to 11. So why is it that when invoice number 10 was issued out, 11 didn't follow, but then 12 followed? Then you go to your book and check, okay, there was an error. So invoice 11 wasn't issued, it's been cancelled. And you can find that invoice 11 has just been cancelled, but then it's in your book. All these are what's implementing internal controls because you check them. But if you don't check and then invoice number 10 goes, number 12, number 14, number 16, like it's not in that order or they're not even numbered. When there's an issue, you wouldn't be able to find out these things. So numbering or standardizing our financial documentations will help us to record it very well so that if there's any discrepancy, we can be able to identify them. That's a way of ensuring what internal control. The fourth one, another way of ensuring internal control is that we need to have periodic reconciliations in our accounting system. Occasional accounting reconciliations can ensure that the balances in our accounting system match up with the balances in our accounts. Okay, so tomorrow we'll be doing what we call accounting softwares. Okay, I'm going to show you some accounting softwares which will even make your work very, very, very easy. Your bookkeeping work very easy. But one thing you need to know is that there are things you can't do away with. Something like a cash book. You need to keep your own. Sometimes you need to keep your own general ledger, and then you have one in the system, so that at the end of the month you can reconcile the two. Right? Especially when two different people, you have a small startup, you don't have the means to recruit more than one person to handle your bookkeeping. There's no problem. So the person records in the book, and the person records in the system. If there are discrepancies, you will know, because sometimes the dates in the transaction might differ from the dates in the system. So recently, a friend asked me to cross-check something for him. So I asked him to give me his cash book, and I asked him to give me access to his software. And one thing about internal control is that not everyone must get access to your software. We'll talk about it tomorrow. So if you're giving someone access to your software, it means that that person is actually working with you and you know the person. Because giving your accounting software must not be accessible by anyone. No, not anyone can just go into your software, because if there are any changes, it can affect your work. So what I was doing was that I was cross-checking his cash book with his accounting software at the end of the month. I realized that there are not even material discrepancies. What I saw was that the dates in the cash book was different from the date in the system. So I assumed that okay, so maybe because he entered the transaction in a book on a different day and he entered the transaction in the software on a different day, that's how come he got different dates. But that shouldn't be the case. So when you see this issue, then you correct the person and no, if you bought electricity on 3rd April in your cash book, in your accounting software, 3rd April, there has to be that same transaction that you bought electricity. The date shouldn't change because you are entering in your system on 5th April. You use 5th April. No, you use the date in which the transaction occurred. I believe we all understand. So even though you're going to use accounting software, some of them we pay, some of them too is free. Okay, so for small starters, we can start with the ones that are free, but then as we move on, we can then go with the ones that you're going to pay a monthly subscription. We need to ensure that our cash book that we have, okay, it's in line with our accounting software. So whatever is in our cash book must also be in our software. So if the two of them are saying different things, then there is a problem. So always ensure a periodic reconciliation. It can be weekly, it can be monthly. You cross-check your cash book, you cross-check your general ledger, then you cross-check with the accounting software to ensure that these things are the same. If there are any discrepancies, you point it out. Then you find ways and means of addressing that issue so that it doesn't happen again. All right. Then the last way, we have so many ways, but then I just used 5. For today's lesson, the last way of implementing internal control is what? Having structured policies and procedures. And one thing is that when you have structured policies and procedures, you need to share it with your staff. If you have procedures, okay, and you are the only one having access to the procedures, how will your staff know and then abide or comply by it? So it's important that anyone that comes to your organization, anyone that you recruit, anyone that you hire, understands the policies and procedures of the organization. I worked somewhere, and when I went there, they told me that, okay, over here, we do not receive cash for payment. All that we do is that the people go to the bank to go and pay, and they bring the deposit slip here, then we issue out receipts for them. We don't want to keep cash. These are structured policies to ensure that people don't steal the money, because at a point, the monies were reducing. It's a school, okay, so at the end, and they have professional classes. Their classes are on weekends. So the person that comes on weekends is different from the person that comes during the day. So when the person that comes in the day comes, if he or she is going to bank the money, it could be that there are some discrepancies, because let's assume that by the end of Sunday, the person made an amount of 1,000 cedis from the school fees that people paid. But then a different person comes on Monday and is going to deposit the money. The money is 800 cedis. Where did the 200 cedis go to? So this is some of the things that the owner wanted to avoid. So he says, okay, so henceforth, no receiving of cash in my company. If you want to pay for something, you come for an invoice. We give you an invoice. You go to the bank. You go and pay. You bring in a deposit slip to show that you have paid. Then we issue the receipt. Then you can now attend classes. So these are what checks. So anyone that's employed is told that over here we don't receive cash. So everyone is what made aware. So that's a structured policy. The person is trying to implement internal control so that theft is reduced, errors are minimized. So you always need to ensure that, especially when it comes to your accounting, okay, that's the heart of your organization. It's important that your accounting is on the right track, your records are in the right way, Because if something should go bad with your records or your money, everything will come to an end. Your money holds your organization. So if you're able to account for your money, if you're not able to identify transactions that occurred, it will really affect your business. So anyone that you work with, spell out these procedures to them. Based on your own discretion, based on what you do at work, you feel that, okay, this is how I want my clients to relate with me. You tell them, please, when my clients come, smile with them, do this with them. So your staff or your employee knows that. So if your clients will come and report you that, okay, when I came, your staff talked to me anyhow, blah, 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 blah. You can be able to deal with the person because these are procedures that you've already told the person that when you a client come, smile with them, do this with them, do this, do that, do that. So the person doesn't follow these procedures. The person is not what being compliant. And we learn that under internal control, compliance is key. Compliance is very, very important. So all businesses, whether big or small, should have written policies and procedures. Even if you think your business operations are uncomplicated, sometimes you think, oh, mine is very simple. I render service, I'm paid. I sell goods, I'm paid. Oh, I don't need any. There has to be. You don't know when an issue might arise. So it's important that you have written policies and procedures. Although businesses are different, the following common processes should be documented. As I always say, our startups, our businesses are very different, okay? But then when it comes to accounting, there are certain things that we need to ensure that we do. So for instance, always document your sales and accounts receivable. Anyone that owes you, have a document, have a file of people that owe you, have a file of the sales that you have made. It all boils down to our bookkeeping that we learned. When it comes to your cash and bank, always request for your bank statements. Always go over your bank statements. Go over the transactions that occurred in your bank statements. Document them, file them, keep files in your office. Go get files, okay? So when you print these things out, you file them. And remember, some of these things are confidential. So even if you are filing your bank statements, it has to be a lock. Maybe you can get a cabinet that can be locked, then you lock them, then you keep the key. Okay, even though some of these things must be filed, know some of the information that are confidential. Not every staff is entitled to know everything that's going on in your organization. If the person is not an accounting staff or it doesn't really handle your accounts or bookkeeping, there's no way you should discuss sensitive issues with them or sensitive issues regarding your cash and your bank with them. No. You only discuss these issues with the person responsible for that at your workplace. Your purchases and payables, the people that you also owe, have a document so that when they come and they're saying that, hey, please, you owe me this, you can say, no, I made payments on this date and this date and this date. Hence, I'm owing you this amount of money. Let's have a documentation of all these things. It helps us, it puts us in check. Because if you don't keep records of the people that you owe when they come, maybe you owe someone, you're supposed to pay in 4 installments. You've made 3 installments, but the person did not, and then maybe you've made 3 installments out of the 4 installments, but per the person's records, you've made only 2 installments. Because you also keep records, you can also bring out your records and show, oh, on these dates, I made these installments, so I've made these payments on 3 different dates. You can bring it out, and the person can also then go and reconcile his or her account. But then if you don't have all these documentations, you don't document anything, we just render the service as it is, we just sell the goods as it is and keep the money. Maybe things might be uncomplicated, but we'll get to a point where your business is expanding and we need all these things. Okay. The policies and procedures for each process should include all the tasks and steps needed to complete a process. So the policies that I said, it should include the various steps and tasks. So for instance, when you come to your office, we should be able to see some steps before someone records a transaction. What are the steps? First of all, issue invoice, receive the money, give out a receipt, record it in this book. You sit down and then you set some steps and procedures, okay, so that people will follow. So even if you are changing employees, anyone that comes in there follows the procedures, but you don't just say it. Because if you say it and the person leaves, the person is going with it. What about the new person coming in there? There has to be policies and procedures and steps that we always take so that we can be able to complete a process. Maybe when you come to my shop, before you get your item, you do A, B, C, and D. All these things are there. They are spelled out to everyone that comes in there. Then we can all follow. Okay. So it's important that, especially with our accounting, let's always have steps. Always, anytime you are buying something, request for a receipt. Tell your employees that anytime they are getting something for the office, maybe they are requesting for money. Okay, they came to take money to buy an item. Always request for a receipt from them and document all these receipts. Okay, so if someone goes to buy a commodity or something for the organization, the person returns with no receipt, query the person, question the person. What shows that you bought this thing for 100 cedis? What shows that you bought electricity 100 cedis? I gave you 100 cedis to go and buy electricity. You come back with no receipt. What shows that you bought electricity 100 cedis? What if the person bought 80 and pocketed 20 cedis? So always request for receipt so that you can be able to reconcile your money. Because you can send a staff to get some items. Maybe you give the person a lump sum. Maybe you give the person 400 cedis, go and buy these items because you don't know the prices yet. The person comes back and gets the items, but then there are no receipts. You need to probe where are the receipts so that I can able to cross check. Okay, these are all the receipts for all the items, and then you spent 350 cedis. Why is the remaining 50 cedis? It shouldn't go into the person's pocket because it's the money for the business. So all these are policies and procedures. Okay, so as I said, our businesses are different, so I can't come and then set policies for you. You know what you do at your shop, you know what you do in your own office. Okay, so you should be able to sit down and analyze. Okay, so how can I ensure that my accounting is transparent? How can I ensure that I have good records? Then you sit down, then you spell out all these details to your staff. Then they can also implement it. Right. So that we've come to a close of today's lecture. So in summary, we learned about internal controls, and we learned that internal controls are policies and procedures that helps us to maximize the operations at work. It helps us to protect our assets. It helps us to keep good accounting records, and it also helps us to ensure compliance. We looked at the types of internal controls. We saw detective controls, whereby we identify errors after they have occurred. We also looked at preventive controls, where we prevent them. Instead of finding out errors, we try to prevent them from happening. So we put in measures that will always help us to check our records, always help us to check our operations so that we prevent errors from happening. Some errors are inevitable, they will come, but doesn't mean that you should give room for more errors to occur. Thirdly, we looked at what corrective internal controls. We said that after detecting the errors that you found, what are some of the measures that you put in place in order to prevent these things from happening again? Then we looked at the need or the importance of internal control, where we said that for the sake of our investors, okay, it puts us at a certain competitive edge. It gives our investors a reasonable assurance. It also shows the maturity of our company. Someone can even be impressed that, oh, this company is just 2 years, but then they have strong or they have proper internal controls. You can't just go and mess up things. You can't just go and do anything that you like. No. Before you join, these things are laid out. So these procedures are mentioned to you. All right. Then lastly, we looked at some of the ways in which we can implement internal controls at our workplace. We said that we can have a separation of duties. One person is not doing everything. We separate them. Even if there are two, they should all be able to review each other's work before the final review comes to you, the business owner. Also, we looked at what physical audit of our assets, especially for those of us who are into selling or producing of goods. We always need to check our inventory, always need to check our raw materials so that we know that everything is in the right shape. So that if there are any discrepancies, we can prevent them from happening. We also saw that there's a need for us to keep a standardized documentation. Our invoices must be numbered. Our receipts must be numbered. okay, our financial reports must be in a certain way. We also looked at what periodic reconciliations. As I said, we'll be looking at accounting softwares tomorrow. So in the case where you are using an accounting software for your bookkeeping things, you also need to keep your cash book or general ledger so you can be comparing at the end of the month. You compare so that if there are any discrepancies or there are any issues, you can resolve them. And then also, we also said another way of implementing control is that we need to have structured policies. We need us at our workplace so that everyone that comes in knows that from A we go to B, from C we go to D. All right. So that's the end of today's class. I believe we have really learned a lot of things. I believe we have really learned a lot of things. As I always say, please, if you have any questions, kindly reach out to me and let me understand your questions. And I believe we understood. Before we go, please, is there any question? Maybe someone didn't understand something. Let me know. If everything is clear, someone can even respond on behalf. If you feel everything is clear, let me know. If you think maybe there are some one or two things you did not really understand, let me know so that I can explain before we bring today's class to an end. Please, do you all understand what has happened? Do we really understand?
Yes.
Okay. So if there are no questions, it means that we can call it a day. Okay, I've seen a chat. Okay, all right. So I believe we've learned something, and then we are going to ponder over what we've learned today about the essence of internal controls. No matter how our organization is, whether small or we just started, we need to implement some procedures or some policies so that every time we are there, even if we are not there, these policies are adhered to by our staff. Okay, so if there are no further questions, as I always do, I will send a summary of today's lecture notes. And then also today, I have an assignment. But this one, I'm just trying to ask you some one or two questions based on your internal controls. So I will send the assignment in shortly and feel free to respond. All right, so without further questions, I'd like to bring the class to an end. So someone can kindly permit me to end the class. Someone can just speak on your behalf to permit me to end today's class. Yes, I can end today's class, right? All right, so
Yes.
enjoy the rest of the day. Okay, so someone is asking, can we please get some templates for policies implementation? All right, so I'll try to add that, okay, so that we can all have some templates and then some idea on how we can ensure that we have these policies. Someone might not really understand some of the policies to implement, so I'll add some templates so you can get a better understanding. All right, please have a nice day and take care. Thank you very much.
Okay, thank you.
Thank you
Bye.
too. Bye.
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 Bye.